All right, let's just get right into it. Forget everything you thought you knew about the oil and gas services industry. Seriously, that old playbook of just drilling more holes whenever prices shoot up, yeah, it's dead. We are in a brand new era, a completely different fight, where the winners aren't just the biggest, they're the smartest.
And that really tees up a massive question, right? What if the most dominant, most profitable player in the energy game is no longer defined by the drill bit, but by the microchip? What if they're actually a tech company just wearing an oil company's costume?
Well, welcome to what we're calling OFS 2.0, Oilfield Services version 2. The rules of the game have been completely rewritten. Back then, your entire fate was basically chained to the crazy, volatile price of oil. But now, the top companies are actively decoupling their success from that cycle. They're using technology, they're diversifying, and they're using just ruthless efficiency to build businesses that can win no matter what a barrel of oil costs.
And in this new ring, we've got three titans slugging it out. You've got Baker Hughes, the technology transformer. You've got Halliburton, the digital and international powerhouse. And you have Patterson-UTI, the absolute master of North American efficiency. Each one has a totally different strategy, but only one can take home the crown.
So here's how we're going to score this thing. Think of it like a championship title fight over 3 massive rounds. Round 1 is the brains. Who's got the smartest game plan for making a profit? Round 2 is the footwork. Who's the most agile at dodging all the crazy global risks? And round 3, the main event, the payout. Who is actually making it rain for their investors? Let's get to it.
Ding, ding! First up, round 1, the brains. See, in this new world of OFS 2.0, it's not about sheer volume anymore. It's about the quality of your earnings. It's not how much you drill, it's about how smart you are with every single dollar that comes in the door.
To score this round, we're using the ultimate metric, return on equity, or ROE. But let's ditch the jargon. Let's just call it the profit power score. All it tells you is this. For every single dollar investors give a company, how many cents of profit does it spit back out? It is the purest measure of who is best at turning money into more money.
But the final score doesn't tell us how they're winning. For that, we got to break it down. This table shows the 3 ways you can boost that score. First up, you have net profit margin. That's just how much you keep from each dollar you sell. And Baker Hughes, BKR, is the clear winner here, pocketing 9.3 cents for every dollar. Halliburton and Patterson-UTI, though, are faster. They win on asset turnover, which means they're selling their stuff more quickly. And that last number, the equity multiplier, that just shows how much debt they're using to juice their returns. But at the end of the day, BKR's fat margin gives it the top ROE score of 13.7%. That's a knockout on pure profitability.
So you're probably asking, how on earth does Baker Hughes get that incredible margin? Well, this chart is the answer. I mean, look at this. Almost half their business, 48%, isn't even traditional oil field services anymore. It's their industrial and energy tech division. We are talking high-tech gear for LNG, for hydrogen, even for data center power. This isn't just talk. They have a massive $32 billion backlog of orders in this high-margin business. They are genuinely transforming before our eyes.
Okay, now let's pivot to Halliburton. Their playbook? Totally different. They are doubling down on what they've always done best: completion and production and drilling. They are the undisputed kings of pressure pumping, but they're not standing still. They're making it smarter. They've already converted half their North American fleet to an all-electric platform called Zeus, which slashes costs and emissions. Their strategy is all about dominating their core business with digital and electric innovation.
And then you've got Patterson-UTI. If Halliburton is the global champion, PTEN is the impenetrable fortress of North America. They've basically consolidated the market, owning 137 of the most advanced super-spec rigs out there. Their strategy isn't about planting flags all over the world, it's about being so efficient and so technologically superior in their own backyard that the biggest players simply have to work with them. All right, so that's strategy. But a brilliant game plan is completely useless if you get knocked out by a surprise haymaker from halfway around the world. And that brings us to round 2, the footwork. This is all about geopolitical agility. Who's the best at bobbing and weaving in a really messy world? Okay, this table really tells the tale. Everybody is getting hit, but they're getting hit in different ways. You've got tariffs messing up supply chains for BKR and PTEN. Meanwhile, you have currency traps. Baker Hughes has cash literally stuck in Argentina. Halliburton is taking straight losses there and in Egypt. And then there's credit risk, the classic headache. Both BKR and Hay are heavily exposed in Mexico, and PTEN had to completely write off its assets in Venezuela.
Ouch. But hold on, I want to pull out one number here, just to show you this isn't some abstract risk on a spreadsheet. This is Halliburton's direct, out-of-pocket cost in 2025 just from new U.S. tariffs. $89 million. Poof, gone. That is the real price of global risk, and it shows you just how exposed you can be.
So how do you deal with a country like Argentina that just won't let you take your profits home? Well, you get creative. You use something called a blue chip swap. It's super complicated, but here's the simple version. The government has locked the front door, right? They put a padlock on your cash. So you use this clever stock market maneuver to basically pay a local partner to sneak your money out the back door for you. You get your cash, but believe me, it costs you. Both BKR and HAL had to do this.
So where exactly is Halliburton fighting all these battles? This chart shows their global footprint. As you can see, North America is still the biggest slice of the pie, but they have major operations everywhere: the Middle East, Latin America, Europe. Now, this diversification can be a huge strength, but as we just saw, every single one of those colorful slices comes with its own unique flavor of headache.
And that brings us to our third and final round, the payout. Okay, after all the smart strategies and all that fancy footwork, what does it all come down to? The cash, right? At the end of the day, a business has to generate cash and give it back to its owners. So who's the best at turning it all into cold, hard cash for shareholders?
Let's start with the raw firepower, free cash flow. This is the money left over after you paid all the bills and reinvested in the business. And here, Baker Hughes is the undisputed king. They're generating a massive $2.5 billion in 2025. Halliburton is also incredibly strong at $1.7 billion, and PTEN, even though it's a smaller company, is still pumping out a very healthy $372 million.
But making the cash is only half the battle. What you do with it is the other half, and this is where Halliburton absolutely shines. Just look at that towering bar on the left. They returned 85% of their free cash flow back to shareholders through dividends and stock buybacks. That is an incredibly loud and clear message to their investors: we work for you. It blows BKR's 51% and PTEN's 46% right out of the water.
Okay, the bell has rung for the final time. We've looked at their brains, we've analyzed their footwork, and we've counted up the payout. It's time to go to the judges' scorecard for the final decision.
So here's how it all shook out. Round 1, the brains. That goes to Baker Hughes for their incredible profitability and that forward-looking tech strategy. Round 2, the footwork, also goes to BKR for their risk management, though PTN's focus on North America actually protected it from some of the hits HAL took. But round 3, the payout, that is a decisive, undeniable win for Halliburton, no question.
So after 3 hard-fought rounds, the winner, by decision of the judges, is Baker Hughes. Now, look, Halliburton's shareholder return policy is absolutely phenomenal, but BKR's strategic pivot to become a true energy technology company, that gives it the most durable, long-term competitive advantage. They're building a business for the future of energy, not just for the here and now.
And really, that brings us to the most important takeaway from all of this. What this entire battle shows is that in this new energy game, the most valuable asset, it's not buried under the ground anymore. It's what's sitting between the ears of the strategists and the engineers who are completely redefining this industry.
And there you have it. That's our breakdown of this new fight for the top spot in the oil field. If you need this level of deep dive research for your own business, please feel free to get in touch with us. Thanks for tuning in.